Harsha Upadhyaya, CIO Equities at Kotak AMC, joins us on the show right now to talk about his market view. Harsha, hi, morning. Looking at your views right now, long-term bullish, short-term range-bound, and in the short term, you don't see any real triggers coming in. What is your prognosis of how the earnings is likely to pan out, and do you not see any positive surprises in there? Is it going to be all painted red?
You are right. For the last 2 quarters, the earnings growth momentum has kind of really worsened, and that situation is unlikely to change even this quarter. While it may be sequentially good, on a year-on-year basis, we continue to believe that this quarter again is going to be quite muted. We are expecting only a marginal growth in earnings momentum in this quarter. So that's the reason why we believe that in the very short term, there are no real triggers for the market to really make big moves.
Explains the underlying market action. You know, in last 1 month, it's been a difference of what night and day. Benchmark indices are up 6%. Small cap index has appreciated by about 7-8%. And a whole host of good quality stocks are now sitting at a 52-week high. Everyone knows that earnings are bad, yet markets are moving up.
Right, it's been more of a macro trade. There were too many concerns on the global issues such as Greece and Chinese market coming off quite sharply, etc. And some of those concerns seem to be behind us, at least for the temporary period, and that's what is triggering some amount of positiveness in the market. At the same time, we have been seeing quite consistent flows into domestic mutual funds, which are getting invested at every level. So that has kind of given support to the market.
Harsha, I see that you're bullish on the banking pack. Is it safe to assume that it would only be the private lot and PSUs is something that you'd completely miss out on?
We are not completely absent in the public sector banks pack, but yes, the tilt is currently towards private sector banks and private NBFCs. And the issues are very well known. I think the credit growth has been very slack in the system, and most of the public sector banks have issues on capital adequacy as well as asset quality. So in this scenario, it's going to be really a great run for private sector banks who have adequate capital and also management bandwidth to actually gain market share. And that's the reason why we are more bullish on private sector banks at this point of time.
But don't you fear that that is a crowded trade? Most of the money managers, not most, I guess it's not 10 on 10. Money managers are bullish on private banks. Majority rarely gets it right, isn't it?
It may be true in some sectors, but this is one sector where in this scenario where earnings momentum is really bad at this point of time. This is one sector which is going to consistently do better than the market, at least for the next foreseeable quarters, and that's the reason why we are betting on it. Yes, valuations are somewhat on the higher side compared to public sector banks, but that's the way the banks are going to behave, because the momentum for public sector banks in terms of growth is completely absent, and whereas private sector banks continue to grow at above market levels in terms of overall growth, and that's why we are in that particular space.
Harsha, what we've seen in last 1 year is broadly a PE expansion fueled by global and domestic liquidity. The earning expansion has not come in. Market prices or stock prices, they go up only because of two factors, either PE expansion and earning expansion. Now that earning expansion is not going to happen for next 2 or 3 quarters, what will happen to the PE expansion? Can PEs expand more?
In our view, currently the PEs cannot expand beyond a point. We believe that June quarter as well as September quarter earnings momentum is likely to be quite muted. Maybe from December onwards, because of the lower base of last year as well as some amount of supportive government policies that have happened in the recent past, you will start seeing some uptick in earnings momentum, and that is when probably there will be a case for PE re-rating. Until then, we believe that markets are going to be range bound, because there is hardly any earnings growth, and PE re-rating in this kind of a situation is very unlikely.
How far are we from the economic recovery? Everyone has an opinion. some market men are of the view that we are 2 quarters away from an economic recovery. Those who are part of the pessimistic club, they feel that economic recovery may not happen in FY16, it will only happen in FY17. So are you part of the optimistic club or the pessimistic club when it comes to the economic recovery?
No, we believe that at least in the second half things should move up quite a bit. For the last financial year, for about 4 or 5 months, the government was not spending anything because they wanted to keep their fiscal deficit under control, and they have started spending once again from April onwards in this financial year. So that momentum has built up. Plus you will have festival season giving some amount of volume uptick for at least those sectors where there is going to be consumer discretionary demand. We also are going to have some benefit of interest rate cuts that have already happened in the system. Is the transmission of entire 75 basis points of interest rate cuts has not really gone into the system, but still there has been a downtick of maybe about 30 to 35 basis points in terms of interest rates. And also the worries on monsoon will be behind us when we are talking sometime in the third quarter of financial year 16. And also people will be moving forward in terms of their outlook to FY17 rather than being in financial year 16. So to that extent, I think all the things will come together at that point of time, and that is when we believe along with economic recovery, even the stock market should start showing uptake.
So Harsha, what's looking interesting as a pocket right now? We see your views are bullish when it comes to the auto space. And again, autos is turning out to be such a varied sector, so to speak, with two-wheelers like Eicher, as opposed to a TVS and Hero MotoCorp and Bajaj Auto with their own stories, Maruti on one end, and then Tata Motors, wherein the JLR sales are ebbing off, but people are now saying that the CV recovery may be bullish for the stock. The stock is trading at a cheap valuation right now, it being slammed to its 52-week low, and perhaps that's the stock to look out for. How would you diversify within the auto pack?
You're right. I think in many of the sectors there is divergence among various companies that are there in those sectors, and one has to be clear in terms of what are the growth opportunities in each of those subsegments and how the companies are placed in terms of valuation, etc., before taking an investment call on particular stocks. Clearly within auto pack, we continue to believe that passenger vehicles, that is cars, will continue to do reasonably well in terms of volume uptake. You also have 7th pay commission report going to be tabled at some point of time in the next few months. So that itself will be a big trigger in terms of the enhancement of consumption from a segment which probably was not consuming that much in terms of discretionary consumption until now. You have some uptick in two-wheelers, although that is predominantly coming from a niche segment of motorcycles and scooters. We believe that that will continue for some more time. The CVs in the domestic market have also shown quite a bit of uptick, and that's likely to continue as economic activity has continued to move up. So these are some of the areas where within auto sector one can be looking at positive growth momentum, and if valuations are right, one can pick those stocks. Apart from auto, there are also a lot of auto ancillary companies which are doing very good in terms of their business, and they are quite diversified in terms of geography as well as different segments that they cater to. So those are also good options in terms of investment ideas.
Harsha, so how soon do you think before markets will make a decisive new high?
I think second half is what we think markets will be closer to a new high or at a new high, not before that.
But what if global liquidity comes back? The good thing here is that foreigners are not selling again. They've turned net buyers given what has happened to Russia and Greece. Can liquidity really change the landscape in the short term? The brute force of money has been so strong again that it could again lift and change the market scenario and market behavior.
That's very difficult to predict, you see. I mean, the short-term liquidity scenario or the short-term sentiments, these are all very difficult things to predict. Based on fundamentals, the PE expansion can happen only in the second half, in our opinion. If it happens earlier, then it has to be something to do with global sentiments and liquidity. I agree.
Okay, Harsha, good chatting with you. Thanks much for taking the time out and speaking with us today.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.